$1.47. Our last box here is an estimated total payment. Even though we entered $1,800 a month, the calculator is not able to calculate exactly to the $1,800. That's because it is doing some estimating based on some of the other entries. But it is correct when it comes to this $1,788.98. That's basically as close as it could come to the $1,800. But everything is correct to that number. You could go and increase the monthly housing budget by a little bit if you really wanted that to be $1,800, but it's so close that it really doesn't matter. But everything is correct to that number. Now, we get our mortgage amount. Okay? Amount to finance, based on our principal and interest payment above, which was $1,200, that means we're going to be able to finance $166,000. That is the mortgage we can get for $1,251 a month in principal and interest payment. The next is our down payment, which is added on to the mortgage, and then we get a subtotal. So the 166 plus the 15 is 181. Now, we need to subtract out closing costs. So we do that, and then we get a final housing budget of $170,686. So that means that for a monthly payment of $1,788.98, we can buy $170,686 worth of house. Okay? $176.86 and 46 cents. Okay? That does take into consideration our down payment as well as closing costs. So hopefully there won't be too many surprises. And that's based on an interest rate of 8.25%, a loan term of 30 years, and closing costs of 6%. Now, let's evaluate some situation changes. All I need to do is go back, and I can change anything. Click Submit again, and it'll give me a new amount. The first situation change I'll do is to lower the interest rate. We're going to go ahead and lower it to 6.5%. We have much better credit. Click on Submit, and now our finance amount has increased to $197,996, and our housing budget has increased to $216,000, or about $30,000, just by changing the interest rate. Now we'll go back, put the interest rate back where it was before. Okay? And now our next situation is, what if we got a shorter mortgage? Instead of a 30-year mortgage, we're going to change that to a 20-year mortgage. We're going to eliminate 10 years worth of payments. Now that will reduce our mortgage amount because we are paying less money. So now our housing budget has been reduced from $170,686 to $152,162. So if we buy $20,000 less house, we are able to pay 10 years less mortgage payments. That might be a pretty darn good deal. Now, we're going to put our mortgage back to 30 years. Now we're back at our $170,000. Now, what if we change that to 40 years? Because some mortgage companies are now doing a 40-year mortgage. Submit. Now, for 10 years more mortgage payments, we've increased our housing budget to $178,000. So basically, to finance $8,000 more dollars, we're paying tens of thousands of dollars more. Not a very smart move. And we're paying that for 10 years longer. So you have to be careful. Going back, our last situation, after putting our mortgage back to 30 years, is getting rid of the HOA. So we're going to go in here, select the $100,000. I'm sorry, $100. Eliminate it. Click submit. And now our housing budget is $182,000. So you'll see, if you had to make a decision between a 30-year mortgage and a 40-year mortgage, or buying a home in a neighborhood without an HOA, you can see that it's much smarter to pick the different neighborhood, if you can. So that is basically our monthly mortgage calculator at mortgagegizmo.com. It helps you to build a mortgage amount based on a monthly budget, instead of just entering a mortgage amount and seeing what the payment is. Thank you very much, and have a great day.